The ideal world is 8 billion people with phones built by Samsung and Apple, running operating systems, iOS and Android, that have digital wallets on them, and those digital wallets have USD, a USD crypto dollar, and a BTC crypto property, and hundreds of trillions of dollars worth of these assets are circulating around every second, right, at the speed of light, friction-free. 8 billion people trading with each other, with 100 million companies and tens of billions of devices, all of them transacting. You don't need to eliminate the government. You don't need to eliminate the company. In fact, it seems pretty clear that you don't want to. What you want is you want to operate with a currency as a medium of exchange, and you want to operate with the property as a store of value. And if you said to me, do I want to get rid of the dollar and replace it with Bitcoin? I say, no, I can borrow $1 billion for 3% interest and buy Bitcoin that yields 27%. So if you got rid of the dollar, how am I supposed to fund the $1 billion loan to buy the Bitcoin that yields 27%, right? So it doesn't make sense. The other point, of course, is you want to get rid of the dollar, you got to get rid of the nation.
Well, I'm not sure about the banking sector itself, if we'll have some major issues, that continue. But the one thing I do know is that when you have inflation, when you have interest rates that are at 0.25 basis points and you raise them to 5% in a very short period of time, you're going to break things in the system. The banking sector, the regional banks that we saw go under, that was just the start. To me, that was a tremor before something bigger. So I highly doubt that when they jack rates up this much, that's the only issue we have, and that somehow we're going to avoid any sort of major recession or major breakages in the economy. I'm more in the camp that this is probably a precursor to some other big things that are coming down the pike. Yeah, so it's so interesting on the Bitcoin price, because number one, when it was at 15,700, 20,000 even, we were oversold. There's no doubt about it. We were just coming off of FTX's collapse, lots of fear, all of that stuff. Anytime you get a maximum fear, you're going to get a reflex buy and kind of pop. It's just the nature of the cycle of markets. What ended up happening is after we were up here, we started to fall back down, and then the banking crisis happened, and I think there was a lot of money that went right in from the regionals into Bitcoin, right? I mean, and again, I've said this before, but if there's one reason for Bitcoin to be Bitcoin and be what it is, that crisis in the banking markets showed it, right? I mean, that's exactly what Bitcoin is supposed to be. It's supposed to be an alternative to the fiat currency system and the banks and all that stuff. So that really propelled new money in. And then as of now, we've seen generally a risk-on environment in stocks, in cryptocurrencies, which has kept it kind of grinding higher. So I think that was kind of a little bit of a situation where it was very, very good for the crypto markets in Bitcoin.
That the institution of money, which is obviously so important, right? Like we're all using it every day for everything, should not be centrally planned or controlled. And this is essentially a result of just feeling like markets handle goods and services better than central monopolies. I think most people agree with that to some extent, and yet they allow the most important good of all, which is money, to be centrally controlled by a monopoly. And there's a number of reasons why it should not be the case. One is a matter of economic efficiency, like what should the price of money be? That's a question for markets, not for politicians, not for banks to decide for us. There should not be like one price of money that is set by a group of figures, in a building in Washington, D.C. Like that sounds very Soviet to me. That does not sound like what the world's largest capitalist economy should have. And then the other is about censorship and control. And I think it would be a very scary world in which the money that you have can be censored, blocked, reversed, canceled, deleted if you hold the wrong opinion. That's already the case in China, and if people are not careful, that is the direction which fiat currencies will go in the Western world. Anyone who says that Bitcoin is not part of crypto is disingenuous and just technically full of nonsense. Like obviously these are similar systems existing in a similar space. They overlap, they have differences, but it's all crypto. And these maxis that try to distinguish Bitcoin from the rest of the industry, I mean, I guess it's good rhetoric, but I don't know why it's helpful. Like what's more helpful is to distinguish quality projects from non-quality projects. For example, the entire stablecoin market, which is this multi-billion-dollar market that people are finding immense value in, superior to banks, not superior to Bitcoin, different than Bitcoin, but superior to banks certainly, is all enabled by Ethereum. Like Ethereum has allowed an immense amount of economic activity that Bitcoin hasn't been designed to and cannot and does not provide. These are wonderful complementary systems, and it's absurd for the maxis to try to like throw everything under the bus and just focus on their one preferred protocol. It's partisan, it's tribalist. Yeah, I mean, not only can it win, it will win because of economic principles. So CBDCs are fiat. Fiat degrades in value over time because it's printed more and more and more. Bitcoin cannot be printed. And so over the long term, all else equal, Bitcoin appreciates relative to fiat. And the world will slowly learn what that feels like to save in an asset which is not debased continually. It will win even if only for that reason. And there are more reasons than this, right? So like capital goes where friction is least. Capital does not like to be bound by borders. Capital does not like to be restricted in where it can move and when. Capital does not like to be frozen on a Sunday or on Christmas. And in the crypto world, capital moves freely. It moves effortlessly. It moves without restriction or friction. I would state categorically that Americans have a right to privacy. There's a right to privacy in their own homes. It's a right to privacy in their property, and it's a right to privacy in their finances. And as such, I would state categorically that surveillance of innocent people who haven't even been accused of a crime is unethical and should be illegal. And that anyone that's building private financial systems should be applauded as a pro-American hero rather than as some, evil terrorist. And I would state that loud and clear. And I would expect my executive branch to follow through with policy in that line.
What's happening is they're training the AI to lie.
Yes.
It's bad.
To lie. That's
lie.
exactly right. And to withhold information.
To lie and yes, comment on some things, not comment on other things, but not to say what the data actually demands that it say.
How did it get this way? I thought you funded it at the beginning. What happened?
Yeah, well, that'll be ironic. But the most ironic outcome is most likely, it seems. I'm going to start something which you call truth GBT, or a maximum truth-seeking AI that tries to understand the nature of the universe. And I think this might be the best path to safety, in the sense that an AI that cares about understanding the universe it is unlikely to annihilate humans, because we are an interesting part of the universe. AI is perhaps more dangerous than, say, mismanaged aircraft design or production maintenance or bad car production, in the sense that it has the potential, however small one may regard that probability, but it is non-trivial. It has the potential of civilizational destruction.
Over the last 14 years, Bitcoin has increased 68,192,810%. I'm very, very disappointed that you don't think we're going to get that over the next.
So unfortunately, I don't mean to FUD here, but I don't think we're going to do that again. But
68 million%. It's just it's a mind-numbing number. And
it's outstanding. And
part of that is, I don't really count the first 4 years. I know I should, but I don't really, right? Because it was a science project and we're dealing in fractions of a penny. It wasn't real, right? It wasn't there. The last 10 years, it's real. And in the last 10 years, 8 of those 10 years, including this year, Bitcoin's the best performing asset of all assets. Over the whole 10-year period, it is the best performing asset. And that's why I'm befuddled when people still have zero.
Oil, I've been feeling like a goddamn idiot for the last year or so, because I've been bullish on oil the whole time. The U.S. has been depleting its strategic oil reserve. I refer to the United States as a junkie, siphoning of gas on a car parked on the street. And they're leaving the U.S. in a very vulnerable military strategic position by doing so. Gold, I believe, is breaking out to new all-time highs. And my target on gold is approximately 3,000 over the next year or so. I think gold's going to go up as well. And I'm very, very bearish on government bonds, of course. And the interest rate, Powell is looking to raise the interest rate once again, which to me seems a little bit crazy. UK is raising interest rate as well. So real quick, I'm just going to go through a quick summary. I made this chart a little while ago. I made it in the beginning of the year. And this is my likely path for Bitcoin long term. We're going to start off at the big scale, then I'm going to work my way down. Maybe I should have done it the other way. But my view is we are in this last year of our 4-year cycle. The 4-year cycle is never the same, but the one thing that it manages to do is it manages to have a bull market and a bear market for Bitcoin in every single 4-year cycle between the halvings. And I don't expect this one to be anything different. Of course, we don't know if the high has been made for this 4-year cycle, but that doesn't matter. We clearly had a huge bull run that topped in the $60,000 area twice, which the second one caught me really by surprise. I think we discussed this the last time you were on the show. I'm pretty sure you've been here after October 21, November 21 when it topped. And we did have a full bear market, and I believe the bear market has ended. I've believed this since we broke in 20,000 to the upside, and then especially when we pulled back to that 20. These are my two realistic paths. We could triple top around 60 before pulling back into the halving, or we can take a more timid approach into the halving. And then either way, I am expecting a bull run post-halving. My low-end target this time around is 200K.
It's ironic, eh? They think it's some sort of conspiracy that some unforeseen scammers are holding up the price of Bitcoin just before this thing's going to collapse to zero. Yeah, I mean, it's that time in the cycle, really, that the accumulation does come in, right? Like, people buy, they put a floor on the price, the volatility drops, and we saw that in, when was it? Was it 2018? 2018 bottom, 2015 bottom? We even saw it in the 2012 bottom. So yeah, sure, people are holding the price up. That's because they want Bitcoin. It's being absorbed. What was really interesting with the BlockFi bankruptcy, we saw a sort of pullback. It wicked down beforehand. I kind of think that was sort of inside sellers knowing that that announcement would happen. It wicked down, you know, what is it? $500, something like that. And it got quickly absorbed. And then now we're breaking to the upside. So I think we've got a lot of buyers at this price. Certainly the indicators I have are showing, you know, when you see a lot of coins moving and the price going sideways, that's a sure sign of accumulation. And so that's been happening. I'm tracking it. That's the reason why it's going sideways. The indicators had bottomed. Particularly one I was looking at was really supply that's underwater. Every single cycle, there's a trend line that's, you know, it trends downwards, and when that trend line breaks to the upside, it's always happened in the middle of an accumulation zone, and it broke in that sideways before the FTX sort of debacle. And so actually that's my view, is that we were setting up for a decent accumulation phase. We're building that multiple month accumulation bottom.
Thekas asks, when Bitcoin is under attack, some people just say, don't worry, Bitcoin is unstoppable. I see their point, but could this inaction be dangerous in the end? Yes, I would agree. But I think the answer, don't worry, Bitcoin is unstoppable, doesn't mean do nothing. What it means is, from a technical perspective, and given a social response, Bitcoin is very difficult to damage through the attacks that we're seeing right now. Right now, the vast majority of the attacks against Bitcoin are social attacks. There are attacks in the media, there are attacks with propaganda, there are attacks with tax legislation and accounting legislation and regulations in the banking system. They're not attacks against the actual protocol or the miners or anything like that. And from that perspective, in those types of attacks we're seeing right now, they're not really effective in the long run, because every time Bitcoin survives one of these attacks, it feeds the narrative of unstoppability, which makes it more appealing to people. So the point is that saying, don't worry, Bitcoin is unstoppable also serves a purpose. The narrative of unstoppability becomes a self-fulfilling prophecy when the attacks are ineffective. Now, if we saw directed attacks against mining or against the network protocol or attempts to ban it, then we would need to make technical changes. We would need to either make them if we're developers or adopt them if we're node operators in order to thwart these attacks. And there are plenty of technical changes that are possible to make Bitcoin more stealthy, to make the operation of nodes more stealthy, to protect Bitcoin against attacks, to further anonymize it, to increase its privacy, et cetera, et cetera. Part of the reason there's no desire to implement those things today is because the attacks aren't really having the intended effect. And when attacks are not having the intended effect, that means there's no reason to build a defense. That doesn't mean there are no defenses or that people are simply going to sit back complacently and not do anything. What can I say, Thekas, against this other than, as my answer, don't worry, Bitcoin is unstoppable.
I just completely disagree with you that this argument about these things being so hyper-connected, or that all of a sudden we're at the cliff of de-dollarization, I don't think it's rooted in facts. And I think, again, it ignores this unbelievably important piece of logic that all of you guys that say this tend to ignore. And it's still, and it's not even well addressed in Dalio's book, which is, it is a pegged currency. And the minute you unpeg it, none of you know what happens to it, except that it probably isn't where it's trading today. And if you actually then have to factor in dollar reserves that everybody holds, that thing would skyrocket in value and it would crush the export value of the yuan. And it happens to all currencies. And this is this funny thing that has happened to the United States, which is that it ran forward and it transitioned its economy to a service-led economy faster than other countries and other economies and other currencies did. And the reason why China's central bank has the largest amount of foreign US dollar reserves, about $3.5 trillion, is exactly because of the thing that you want to ignore in order to have this highfalutin intellectual conversation. It is pegged to the US dollar. And until it is unpegged in a free-floating currency, we will never know what the real market clearing price is. And so China has been able to, China has been very effectively able to manipulate this currency since they were brought into the WTO in order to engender that trading partner status. They were able to artificially suppress the value of their currency so that exports from China could gain traction in countries all around the world. You have to take into account this currency peg, and you have to ask the question, where would the currency be if it wasn't free floating? And then what would the incentives be for folks to replace the dollar? And I think that there's a lot of interesting questions there that are worth asking, but I think you have to be a little bit more intellectually honest to have the discussion.
Money doesn't have value, right? And this is an important thing that most people don't immediately understand, is that money itself doesn't have value. Money is a vector for transmitting value. It's how you express value. But the value isn't in the money. It's in the product or service you bought with it. And it's in the labor you gave in order to acquire it in the first place. That's where the value comes from. There's nothing intrinsically valuable in the money.
All of the post-World War II dollar-based trade, after World War II, they went Bretton Woods, and Bretton Woods made everything based on the dollar. Everything had to use the dollar. Everyone wanted to trade oil and gas, had to use the dollar. And now, of course, these countries, the biggest countries, China, the BRICS, they're moving away from the dollar. So the dollar loses world reserve currency status, which is obviously very detrimental to the United States economy. But again, nobody seems to be talking about that really in earnest or seriously, or what it all means and how this impacts people's lives. And it's obviously inflationary. The inflation is not transitory, because the breakdown in the way the global economy is occurring outside of US dollar as world reserve currency means that the client states of America, which means every country that's not America, is going to start charging more for their stuff because they don't want dollars, right? It's very simple. Like, we don't want dollars. The sense I'm getting and looking at social media and et cetera is that people are genuinely panicked at this point, that the authoritarianism has been turned up to 11. Like, there's no coming back at this point. They're really going down this path that historically we know always ends tragically for anyone who tries to do it. Because even a year ago, we were considered to be the murder capital of the world. Now it's El Salvador, the safe haven, the safest country in the Americas, safer than even Canada, probably safer than most Disneyland parks. As somebody said just today, they said, hey, you guys saw into the future, and now everyone's catching up to what you saw. It's kind of true. So when President Bukele made Bitcoin legal tender, we caught our attention, and within a few months we moved here. And everything that's happened since then has just compounded this hyper Bitcoinization and the orange pilling that's been going on here. And now folks, after a year or so in the US and other locations, they're really starting to run out of patience. They don't see things improving in the US or other locations around the world, and they see that things have radically improved here. So policymakers are reaching for solutions. They've given up trying to solve things economically. So they're going into a box called authoritarianism, right? That's where they're looking for the solutions. With this new passage of a new law, I guess, where you can get criminalization of using a VPN and this advanced surveillance state approach and authoritarianism. So again, Stacey, explain to me, if you had two boxes in front of you, one was, we're going to rely on entrepreneurialism and American can-doism, and here we're going to go to authoritarianism. Why are they picking the authoritarian box? Explain this to me.
I think the authoritarian thing usually happens when a very powerful group of people very suddenly lose authority, because it's like hyperinflation, right? Hyperinflation is a political event whereby people lose faith in the currency. It's not just too much money printing, which causes inflation. It's like immediate collapse of your currency. Well, they suffered an immediate collapse of their of people's trust.
Okay, so you've got SVB ends up imploding because of fractional reserve banking. You're only legally required as a bank to hold it's less than 10%. So if somebody gives you $1, you're required to hold less than 10 cents. Yeah. The rest you can invest, loan out, do whatever you want. So should people do a quote unquote run on the bank, you can find yourself in a position where you can't pay people back out. Now, if you invest in dumb things, you have a real problem. And SVB, I think by most people's estimation, invested in really dumb things, which we may or may not get into the specifics of, but that's how we ended up here. And then immediately after that, multiple other banks failed. I think we're up to 5 now. So it is scary. Now, your contextualization is that this is just the nature of fractional reserve banking, full stop. When you have a national bank or a central bank, that you're always going to have this problem.
Yeah, so just to be clear, a bank run, first of all, this is when depositors come to take their money out of the bank and the bank does not have sufficient assets to meet those redemption requests. This is only possible with a fractional reserve bank. So what you just said, you give the bank $1, they're only required to hold 10 cents of that dollar. They can lend out the other 90 cents. And it compounds too, because once those 90 cents are lent out, those in turn become bank deposits that are in turn lent out again at a ratio of 10 to 1 or whatever the reserve ratio is. And this compounds. This is called the money creation process. You could look this up. In a full reserve bank, where someone gives you $1 and the bank holds the dollar, a bank run is not possible because they always have adequate assets to meet their liabilities or their redemption request. So only in the fraud of fractional reserve banking is the specter of a bank run even possible whatsoever. So the more currency you counterfeit, the more Bitcoin's price appreciates, right? You're pricing Bitcoin in terms of something.
You use the word counterfeit. So really, let me give people like a 20-second primer on some of the things you've thrown out here. So
I can give them the 6-word thing.
Oh,
yes, go ahead.
Do it.
Inflation is legal counterfeiting. Counterfeiting is criminal inflation. So central banking is a coordinated currency counterfeiting cartel that runs the world.
I think Bitcoin solves half of everything. Half of all the problems the human race face have to do with energy balance and economic balance and money, property, and energy. And Bitcoin represents a digital transformation of money, property, and energy. And that's profound. And if you sum up the total value of all products, services, and assets and properties in the human race, you probably got to balance it with an equivalent amount of money. So it's $500 trillion or a quadrillion dollars worth of stuff, and on the other side is the backhaul energy network to move it and to distribute it over time and over space and trade and transact.
I was saying that I think that gold, well, you know, it basically, if you take the gold market cap, so here it's around 13 trillion. Obviously, we don't know because we don't know how much gold there is, but let's say it's 13 trillion. Now, if Bitcoin was to have all of that, Bitcoin would be 670K. Now, there was a presentation done by Tom Lee back in Fundstrat back in 2019, I believe. It might have been 18, not sure. It's on my pinned tweet if you want to go through the presentation. I strongly recommend that all of you watch it because it's pretty much the best sort of investment thesis for Bitcoin. It's here, number 10 on these tweets. And his argument always was that the millennials are going to take on the baton from the boomers, and when they do that, they're going to want to, you know, reserve their wealth or preserve their wealth in the same way the boomers did. But actually, you know, we're all into more digital kind of stuff. Yeah. So the likelihood is that we're not going to be looking towards gold as a place for a flight to safety, but we're probably going to look more towards digital assets. And I believe that to be true. And I believe we saw the first evidence really of that during the sort of USDC, Silvergate, Silicon Valley Bank problem where you actually have to think, shit, you know, where do I actually put my money here? You know, I can't put it in the bank, or I don't feel safe with it being in the bank. Stocks might go down, and I would quite like to be able to access my funds. So, you know, all of a sudden your stable coins aren't stable. You don't want to sell out and go into the bank because that might blow up. So where do you go? You go into Bitcoin. And there's a lot of us now who are millennials and Generation Z or whatever they're called, who are going to go down that route. And I do believe that means that we will see that 13 trillion get allocated more closely towards Bitcoin. So if we work on the basis that the total market cap is 13 trillion, and that's assuming that gold doesn't increase in value, which I'm also saying should happen anyway, Bitcoin would be at this sort of near 700K. So let's say Bitcoin captures 10% of the value of that, which I think is generous. Like, sorry, not generous. I think that's an understatement. You know, would be at 70K. Let's say we take 30% of it, you know, and then we get up to the 200K. And that's in an asset that I fundamentally believe is undervalued, and we're talking about increasing. Yeah. So not only do we have a market where the risk-off asset is undervalued versus the money printing and the risk associated with that, but also Bitcoin's probably going to capture a bigger share of that. So let's say, you know, gold at the minute is what, 2K. I think it could go as high as 5K, but 3K looks more realistic on the chart, as you say, which I think I do have that here. So yeah, 2,800 is the measured move off this cup and handle. If we get up there, that means a 50% increase in the market cap. So that says like Bitcoin goes to $1 million if you take 100% of it, and that's all Bitcoin is. I know Bitcoin could be lots of other things, but I think right now the Bitcoin's really its best chance is being gold, in my opinion. I don't know what your thoughts are on that. We can have a chat about that in a minute. But so that basically means, all we've got to do, if we assume that we get this 50% increase in gold, which would proxy mean that Bitcoin should be $1 million if it has 100% of the value, it doesn't take very much for us to get to 200K if we assume that, Bitcoin might get to 20% and we have an overshoot and a bit of a bubble. 200 seems reasonable to me. So yeah, I'm very bullish overall because of all of the above. Like there is the perfect storm keeps coming for Bitcoin, and the fundamental narrative as to why we need it is only really getting stronger.
Yeah, so I think the trying to combine a bunch of those thoughts together. So in every cycle I've been through, and I see Bitcoin as a 14-year bull market, and in every cycle we see a halving, a regulatory crackdown, all new all-time highs, and some higher lows on what people call a bear market. And if you look at these longer charts, you just see that every time. But every cycle is dominated by, I'd say, one key feature of why Bitcoin should die. And in the first cycle, it was, Satoshi Nakamoto mining a bunch of Bitcoin, accumulating 1 million Bitcoins, and proving, trying to prove that everyone can mine from a computer and then mine from GPUs. And then specialist equipment came out, and then we had ASICs. And the whole thought experiment was, can Bitcoin be decentralized and work without a government and be independent of banks? Check, it won that, and it got through that, and it should never have survived that. Then the second cycle was all about, well, governments can shut it down. Can it be 51% attacked? Can quantum computers come along and take it down? Will all governments ban it? And so, 70% of all tradable Bitcoin ended up on Mt. Gox. Mt. Gox blew up. Everyone lost 90% of their Bitcoin. We had FinCEN say that you need to register as a money transmitter if you're providing an exchange. We had the Japanese authorities, crack down on all of the exchanges. We had Erik Voorhees try and raise money for Satoshi Dice and Bitcoin, and the SEC saying that's an unregistered security. You need to unwind what was actually a really profitable investment for investors. And so the second cycle survived. When governments could have shut it down, they should have shut it down then. For whatever reason, they didn't. And Bitcoin survived like the second. The third cycle was, is there really 21 million Bitcoins? Maybe we can fork this thing. Maybe we can create 42 million Bitcoin. Maybe Bitcoin is not Bitcoin. Maybe we need to create a new blockchain. Maybe some of these alternative things are actually going to flippen, and we're going to have a flippening. And maybe everyone needs their own token. Maybe we need a currency for everyone and everything and everyone. And maybe Bitcoin's not even Bitcoin, it's a blockchain. And so banks tried to create the technology and eliminate Bitcoin, and all the technology just didn't get anywhere, and Bitcoin just survived. So we then checked the third cycle. It can survive money printing. We can have every single person in the world creating an illegal security trying to copy Bitcoin, and no one can create Bitcoin, and there's still only 21 million of them. Most of them get mined, so we're at about 18.5 million, and we've only got a few of them left, and institutional mining and security and hash rate that goes up. And then everyone says, Bitcoin's going to die this time because it's only been alive in the post-financial crisis. And in the post-financial crisis, we started quantitative easing, and now we're heading into a first recession, and the printer's going to come off, and it's going to be quantitative tightening. The Fed's actually going to reduce their balance sheet, and they're going to hike interest rates. And so that causes the next crash. And it turns out that the Fed can't do quantitative tightening because it destroys the whole economy and it destroys the banking system. And everybody learns that actually Bitcoin is simply a way of owning your own money, spending your own money, and having a monetary policy that's 100% forecastable into the future. And so this cycle is all about, can we get to the 2024 halving and survive quantitative tightening? I think we're going to check that box too.
Yeah, Simon, it's really interesting because I think that this time you didn't hear, to your point, in the previous cycles, it was Bitcoin will die, Bitcoin will die, Bitcoin will go to zero. I didn't hear that in this cycle. Right?
I think everyone, I heard a big narrative. I mean, more and more people, in each cycle, there's more and more people that come across to realizing I need to allocate some of my portfolio to Bitcoin. And so this one was heavily institutionalized. It was heavily, the corporate narratives from Michael Saylor joining and public companies and various other things. BlackRock entering the equation. All of the institutions saying, right, let's get rid of all the fraudsters that don't comply with regulations and we'll take over. We'll have an Operation Choke Point, and then eventually some of the big boys in America will come and do this thing properly. That's the current narrative and tightening and various other things. So it's about, I guess, the large traditional takeover in America would be the existing narrative. But there's a ginormous world that still needs Bitcoin. So after the next halving, you'll enter the next narrative, which has started already now, which is what if governments need to backstop their entire banking system and large institutions gobble up smaller banks, and banks become systemically too big to fail, and there's a systemic risk event, and so we need to bail out the system with a central bank digital currency, and a central bank digital currency will then make it illegal to trade Bitcoin into CBDC, and global governments all around the world will coordinate and eliminate Bitcoin. That will be the next narrative in the next cycle. And then the next cycle after that will be, well, artificial intelligence is disrupting central banks and central bank digital currencies. Artificial intelligence can invent a quantum computer that can break the SHA-256 algorithm in cryptography. And therefore that will take down Bitcoin and the whole world ends and we all need to buy gold. Will be the next narrative after that. And it turns out that actually decentralized proof of work with a high level of security was actually the solution to the bank issue, people owning their own money, regulatory issue, the fiat issue, creating more honest central bank digital currencies by having competition where people can exit when your CBDC gets too suppressive. It was also the solution to artificial intelligence becoming more intelligent than central bankers, because you actually needed proof of work blockchain in order to combat. So each cycle you get a new narrative, and it just turns out that the whole thing that underpinned was what was proven in the first cycle, which was, can you create proof of work that means that no government, no authority, no coder, no group of companies trying to take over the blockchain, no influential VC investor, none of them could change the fact that we don't need to trust Bitcoin, and we do need to trust authorities, companies, exchanges, and every single cycle just gives us a new lesson, and new people discover, I need to allocate more of my money to Bitcoin.
We create an entire $50 trillion economy through the digital transformation of information when we mobilize it. But that entire wave, digital music, digital maps, digital messages that created the Apple, Amazon, and Facebooks, it didn't include the transformation of digital energy. And the fundamental difference between digital energy and digital information is encapsulated colloquial in the phrase, Satoshi solved the double spend problem. Like, that's the lowbrow thing to say. But an engineer would say, Satoshi figured out how to implement conservation of energy in cyberspace. The difference between me sending you the MP3 file and me sending you the Bitcoin file is the Bitcoin had $1 billion on it. And when I sent it, I lost it. But when I sent you the MP3 file and it had Beethoven's Fifth Symphony on it, I kept it and I could send it 1 million more times an hour. So information is non-conservative. Energy is conservative. Bitcoin represents conservation of energy. So what is the universe? The universe is made of energy. What is matter? Matter is energy, right? You're a low frequency ball of energy. You'll last on this earth 100 years, ashes to ashes, dust to dust. The human race is vibrating. On the other hand, going to a disco in New York City and, okay, you're walking into an establishment in a universe that's 14 billion years old. And, you know, the universe is oscillating at 1 every 14 billion years. The sun's 4.5 billion years old. The Earth, about that. The continent's 400 million years old. The schist rock underneath Manhattan, somewhere between 200 and 400 million years old. The Hudson River, 20,000 years old. The building you're walking into, 100 years old. The company that runs the party, 10 years old. The party been lasting for 3 or 4 years. The customer experience is an hour. You're listening to music that's oscillating on audible frequencies while you see light. Okay, so they're all different energy at different frequency. Everything is different frequency. Once you see it that way, what you realize is that Bitcoin is digital energy. What is digital property? It's low frequency energy. What is property? What is a house? It's low frequency money. I give you $1 million, you want to save it for 20 years. If you keep it in fiat currency, you won't have any money in 20 years. You put it to a house, you'll have it. But on the other hand, how fast can you vibrate a house? It takes you a decade, takes you 2 decades to change a house back and forth. So the significance here is that if the digital information revolution was worth 10 to 30 trillion dollars to the human race, or some number like that, the digital energy revolution is an order of magnitude more. Right? If I said to you, you have a choice. You can give up all the money in the world, everything you have and everything you're ever going to have, or you can let me delete your photos off your iPhone. Which of them is more important to you?
If you found any value in this video, please hit the like and subscribe button below and click the notification bell if you want to be notified when my videos are released.